Hey, good evening. Rick Prosser here from StockChartSense.com, April 17th. And here, what I want to do today is I basically want to cover the same exact stocks and the averages that I covered yesterday. I would just basically want to piggyback off of yesterday because there's a couple things I want to clarify and just a couple things I want to talk about. I'm going to try to not make this video as long as it was yesterday. So let's see if I can accomplish that goal or not. We'll just start out here with the Dow. And real quick, I mean, bottom line is, we had a pretty good day. We had a really decent day. I liked what I saw in all the averages, especially in Apple, which we'll look at here in just a minute. But it wasn't too bad. But I will tell you this, and then we'll talk about it, and I'll show you, and I'll take you through it here. But my thesis still hasn't changed. Yesterday I told you, you got to be a bit careful in this market because things have changed, and that's still true. In my opinion, I still think that holds true, and I'll tell you why here in just a few minutes. But still think you need to be careful. So we'll talk about thesis in here, but let's just run through the averages real quick. So bottom line is this: there's volume. The up days again still aren't as great as the down days. Especially we're talking about looking here, not so much going back here. So, and again, the market has changed. Why? Because in this down day, you got this pretty big break of the 50-day moving average on high volume. That hasn't happened for a long time. So that's just a different pattern. So it just makes sense that things have changed. So yeah, we had okay volume on the up days, but again, still the down days have been greater than the up days. All right, but still it looked pretty good today. So let's look at the diamonds here, which is the tradable instrument, and you can really see it here. Look at this down day here, break of the 50-day moving average. Down day, down. Here's the up day. So obviously the down days are still greater than the up days. So that's still a bit of a concern for me. If I would have saw a big spike like this here, I'd been a little more encouraged, but I didn't see that. So I still think you got to stay cautious. If we were looking at a red light, we're at yellow right now, in my opinion. We're not at the green pile in mode here. Let's take a look at the spiders. And actually, the spiders are still, again, the S&P 500 is still more encouraging to me than the S&P, or excuse me, the Dow. And and one thing I like about the spiders is, again, it's made up of 500 stocks versus the Dow, which is 30. So I think this is a better gauge of the overall market. This was actually pretty decent volume today. It really was. Sold off a little bit by the end of the day. Again, still not as high as on our down days, but nevertheless decent volume. Okay, now let's go take a look at Apple here. And Apple, really liked Apple's action today, and the reason I did is because it was a pretty good volume. Great up day, and the truth of it is it closed right at the high. So it really looks good, and I think we're getting an oversold bounce here because of, if you look at the stochastics here, which I'm not going to get into it, but it's a momentum indicator as well as an oversold, overbought indicator, and down around 20 here tells you that the stock is oversold. So you could say this is an oversold bounce, and actually I could say with some other indicators, this is actually probably an oversold bounce for the overall market, but that's for the premium content, which we're not going to get into. Okay, so here's the deal. Here's what I really want to talk to you about is this. Yesterday I had made mention to you that I thought Apple would bounce today, which it did, and it had a very nice bounce. Actually, it had a better bounce than I thought it was going to have. But I also made mention to you that I thought at some point, or I thought it would actually hit the 550 mark. Now, I really did. I thought at some point it was going to hit that, and it still can. That still actually could happen. But here's the thing: is as a trader or even an investor, but mainly talking to traders here, so I'm just going to focus in on that. So if you're a long-term investor out there, take everything I'm telling you with a grain of salt, because I'm talking to traders here. There's a different method to when you're a long-term investor. But here's the thing: if you're a trader, you need to have a thesis in this market. You've got to have a thesis. You've got to be able to have an opinion about this market. Now, generally out there, you're going to fall in, one of three categories. You're either going to fall into, you agree with what I'm telling you, you disagree with what I'm telling you, or you think, I have no clue what really you're talking about, so what you're saying sounds good. I think, that sounds logical. You're somebody who really doesn't have an opinion. Okay, if you're somebody who doesn't have an opinion, here's my opinion of that. Don't be trading. You need to get educated first before you start trading. Why? Because you don't even have an opinion. So that's what I would say to you. Now, for the other two, those who agree and disagree with me, is this: is it's okay. If you agree with me, great. If you disagree with me, great. Really, it really is. And here's why. You know, your thesis may be this, and we'll just use Apple as an example here. You might be saying, today's the bottom, high volume. I think this stock goes to new highs. And you know what? You could be absolutely right. I disagree with you. I don't think that's going to happen. I'll tell you what I think is going to happen. I think this stock's going to come up around here somewhere, and then it's going to begin to sell off. Now, why do I say that? Two reasons. One, earnings is coming up. I think it's next Tuesday if I'm right, but it's next week. Earnings is coming up. This stock is oversold. I think a lot of this buying is because it's oversold and because people are going to play the earnings theme like they do with Apple all the time, thinking, they're going to have this great blowout, which they could. I don't know. So my thesis is, as the stock will rally up and those who are playing the earnings theme are going to start bailing out somewhere up here because they're playing the earnings theme. They're not going to hold over earnings. Two, you've had guys up here that bought and the stock shot way down here. Well, these guys are now losing money. So as the stock comes up to test this area, those guys are going to be potential sellers. Why? They know earnings is coming up, and the question is, do they want to hold it over earnings? My gut says they probably don't. So my thesis is the stock rallies up to somewhere up here, or it might even come up and try to test this, and then it starts to roll over. Now, when I say roll over, does that mean it's just going to keep going down, down, down? No, I don't mean that at all. The truth of it is, it might come down to here somewhere, stop, because of course earnings will be, by the time it does that, it's earnings time. And then the problem is, though, is what happens at earnings? Does the stock shoot way up here, or does it gap down here? Or does it do nothing? We don't know. And the reason is because the last earnings was such a great earnings that the stock just kept going. It just kept going up. Well, this stock I still think is priced for perfection. They either got to do just as good with the earnings or most likely better than the last earnings. I think if there's any hint at all that anything, if there's just one little flaw that really never would matter before if the stock was way down because of the great run it has, I think it's going to hit the stock. That's just my thesis. So, but here's the real question is this. If your thesis is that the stock is going to new highs this week, and yet the stock comes to here and then it starts to roll over on high volume, these high volume days, down days, even something like that, starts to roll over, the question I have for you is, are you going to change your thesis? Or are you going to stick with your thesis and say, no, I still think this stock is going to new highs? If you think that, you know what, you're going to get yourself in trouble. What you need to learn to do, or make sure you do if you don't already do this, is you cannot sit there and think, I know I'm right, this stock's going to new highs. Yeah, you know what, I think it is too. I just don't know if it's this week or next week because I don't know what earnings are going to be. So you got to be careful with your thesis. Let's say because again, my thesis, as I said, I think it comes up here and starts to roll over. But let's just say for a second the stock comes up, and it just keeps blowing through this. Well, guess what I'm going to do? I'm going to change my thesis. I'm going to change my mind. I'm going to go with you guys. I'm going to go, no, they were right. I was wrong. And change it. Then what I'm going to do? I'm going to wait for an opportunity for the stock, when it pulls back, to go ahead and grab some stock. Why? Because it blew through this high here. I'm willing to change my thesis. In case in point, I'm just going to the only reason I'm telling you this is just to give you a case in point here. I was short the stock right in here. And the stock came down to here, Now, I thought we might get a bounce day, but honestly, I didn't think we were going to get this big of a bounce. I really didn't think we were going to get that big. I honestly thought we'd get a bit of a bounce, and then maybe it would turn over and come back down. I thought we would see the 550 mark first and then get a big bounce up. But we didn't. Well, guess what I did? When I started seeing this, I covered my short and I went long. I changed my thesis. I no longer held on to the thesis that, hey, this stock's going to 550 and I know it. I could be right, but you know what? I might be right next week. I wasn't right this week. So I changed my thesis. And so I made a little money going down, and now I'm actually making a good bit of money going up. So the point is this, is you need to make sure you change your thesis when the market proves you wrong. You must be flexible. If you're not, you're going to get hurt, because as a trader, you got to be flexible. When you're looking at a chart, what you're looking for is information. You're looking for the chart to tell you something. And the chart told me something today. And it told me, dude, you're wrong. I'm not going to 550 today. I go, okay, well, let's change plans here. That's what you got to do. So that's the point I'm trying to make. And the point I was also trying to make as well as yesterday, I still think you're going to see some selling into this rally. Didn't happen today, but I think in the next day or two, you're probably going to see some selling. If I'm wrong, then I'm wrong. I will change my thesis. Guys, this is all about being wrong sometimes. Sometimes, a lot of times. But the real key is, do you change your thesis, or do you dig your heels in the sand and say, I'm sticking with it? If you do that, you're going to get hurt. Now, going back to the Dow, and we'll actually just look at the S&P and wind it here. My thesis on this is simply this, guys. I think it comes up here, and then I think it starts to roll over. I don't think you're going to see, now again, you might see new high. If it starts to go up here and bust through this, that means earnings were spectacular and pretty amazing, and then, you know what, I'll change my thesis again. My thesis right now still stands as this. I think it comes up here, and then I think it rolls over. What am I looking for when it rolls over? I'm looking for one or two things, and this is to gain information. If it comes up here and it starts to roll over, I'm looking for it to come here. If it catches a bid somewhere in here, it makes a higher low than this here, and then starts to work its way back up, I'll be really encouraged, and I'll actually get more bullish. Why? Because the stock is making a higher low. The truth of it is, the stock is making lower highs right now, and it's made a lower low than this here. So I would be encouraged to see that, and that would also give it the ability to actually maybe start working its way up and then pushing through and making new highs. Now, ultimately, I think by the end of the year, the market does go higher, if nothing goofy hits the market or nothing unexpected. But I'm just not sure about right now. So if the stock comes up, or the market comes up here and then comes down and then really starts going down, if it breaks this low right here, then I think we're going lower. It just sure seems like, now my concern would be if it comes up to here and then, it makes a lower high compared to that, and then starts to roll over. I mean, that could indicate some more, some more downside. That really could. So, the bottom line is simply this: be careful out there. That has not changed. You still need to be careful, and you still cannot be trading this like you're over here. You can't be trading it like you're over there, because you're not there anymore. This is still different. We have to let this market work and go through some stages here to get a better indication if we start to do this again over here. I mean, it could eventually start doing all this up here, where it was going like that, where just you could buy anything and you'd make money. I mean, that could start to happen, but we're not there yet. So be careful out there still, but make sure you still look for opportunities, because they're there, and today was one of those days. So hey, that's it. I hope that helps you, and just again, be careful out there, and we'll talk to you later on.